Hello, and welcome to Grow Invest 2020. May there be a 20 and 21, maybe? It kind of is up to you guys. If you're going to make a really great effort today, and we actually will make each other grow, then we will probably do it again next year. I'm Zinja, and I'm your host today in this hybrid event. So that means that we are all physically here, but we are also live streaming with 1, 2, and 3 cameras. And they point towards us, not you guys, so you're good. I have connected startups and investors for the past 10 years, and my focus has always been Nordic. So today I'm very happy to be able to help connect you guys to a less known part of the Swedish startup ecosystem, Helsingborg and the south of Sweden. My notes actually talks about practicalities and hashtags a little bit down the line. But I think you guys, maybe in particular the local ones, would like to know the official hashtag already now before I do my opening statement. So hashtag GrowInvest2020, if in doubt. Cool. So we're here today because there is more to Sweden than Stockholm. Also, when it comes to interesting startups and exciting investors. The purpose of today is for you to get to know this region, but also to get to know each other and help each other grow. Like always, when I'm in Helsingborg, there's been a lot of thought put into the social dynamics of the program and the full day. How do we make sure that people don't just show up for yet another conference and then they've spoken to the same 5 people that they knew already before they entered? This is not such a day. Let's see, yes. So we had 50 seats. And today we are 47 investors in the room. Once we leave by the end of the day, we will hopefully be 47 people richer. The way that we would like to enrich you is with 3 sessions. So we have a panel session on funding strategies, IPO versus venture capital, impact investing, and the aftermath of COVID-19. Each of these sessions will be followed up with a workshop where you have a chance to deep dive into the subject, but also to learn more about your fellow investors. Food. Food is another important element when it comes to networking. I used to run co-working spaces in Copenhagen, quite similar to Mine Park here in Helsingborg. And the most important time of day was lunchtime. Because we didn't talk about trivialities. We spoke about matters, things that actually matters. It could be your new hire, or how to find your new hire, more likely. It could be your first fire. Remember that feeling? Oh, God. It could also be startup founders talking about that now my investor is asking for yet another report. What to do? So let's make sure that today we skip the trivialities and we discuss things that actually matters. Last but not least, we will end the day with a poker night. And now it does say practicalities. So there's a free Wi-Fi. Just connect to Helsingborg. And there's no password. I've checked it out already. It works perfectly fine. There will be coffee all day. So by the entrance, where you hopefully already supplied yourself with a bit of coffee, it will keep streaming all day. Restrooms are out the door and to the right, and then to the right again. Corona is still a thing. So let's keep our distance, wash hands, use the sanitizers that's displayed everywhere. Thank you. Like mentioned, this is a hybrid event. So all the panel sessions will be live streamed and recorded and shared afterwards. The workshop sessions will not. What else? Practicalities. Oh, right. Did I mention the hashtag? Hashtag GrowInvest2020. And also, if you want to tip a fellow impact investor, keeping an eye out for who are the startups we'll see today, and what are the learnings we will hear from these panel sessions, you can tip them and share the link, www.growinvest.se. And they can get the live stream link right there. Should you have any questions about anything, then please don't ask me, but ask Rebecca. Can you stand up so people can see you? Exactly. She is here to help. Good. Before we dive into the first panel, we'll just do a very quick icebreaker. So typically when you enter a conference, you tend to sit next to someone that you know. I'm not going to ask you to change seats, but I am going to ask you to stand up and do an awkward Corona Hills Pocahontas style, or Indian, or with the foot, whatever you prefer. I'll leave the awkwardness to you, but stand up and then say hello and say what is your purpose here today to the person behind you, not next to you. You can work it out. Good. There you go. Hello, fine people. Thank you. That was a great start. Vala from Skåne Startups is here to introduce the first panel. She has gathered investors to discuss funding strategy, IPO, and venture capital. Please.
Thank you. Thank you, everyone, for being here. I would like to ask me to join on stage Sara from byFounders, Ulf from Crunchfish, and Alexander from Preseed.
Thank you.
Alrighty. So I wore a dress, not thinking that I'm going to have a microphone on today. So let me know if my voice is okay. Thanks for being here. Thanks for joining. I'm very curious to hear about your thoughts and your insights about all things startup and investment related, but primarily focusing on venture capital and IPO. So I'm going to introduce myself, then I'm going to kind of hand it over to you and say as much or as little as you would like about yourself that we need to know. My name is Vala. I'm from an organization called Skåne Startups, and we act as the touchstone organization for locally founded startups looking to raise specifically venture capital investment. So money-wise, that's over 10 million Swedish crowns. So if anyone in the audience knows any startups that are raising that are not on my radar yet, please let me know. And yeah, that's it from me.
Okay, I will take the liberty of starting. My name is Ulf Svensson. I work, as you mentioned, on Crunchfish. I work as investor relations and marketing manager. So a lot of sort of connections with, as you may know, Crunchfish is a listed company. Before that, I actually worked for 4 years as a financial advisor at a firm in Malmö called Sedermera Fondkommission. We helped companies raise capital and list on the stock markets. So I think I've actually been involved in, 10 or 15 IPOs during those 4 years. So quite a lot of experience on what it means for small companies to actually list on the stock market.
Cool. Sara is my name. I am Swedish, but I'm living in Copenhagen. And I am an investor with the early stage VC fund called byFounders. So it's a 100 million euro fund where we've so far invested in about 28 companies. And my previous experiences before coming into VC has both been on the startup side, where I've had some short stints with crazy entrepreneurs like Johan Schelfenholstein in Singapore and Jimmy Wales in New York. But I've also been on the dark side for a few years. So I spent some years at McKinsey as a management consultant and in a bank. But now I am spending 100% of my time meeting with founders, and I love it.
Cool. Hi, my name is Alexander. I work for a Danish early stage investor, VC investor called Preseed Ventures. We do investments in early days, even before byFounders go in. So we are a typical pre-seed stage fund out of Copenhagen. We invest in both all of Denmark and southern Sweden. So we are kind of like narrow in the geographical scope, but broad in what we invest in. So everything tech related and also a lot of mid tech. I've been there in the last 5 years, and we've been we've been around for like 20 years, and we've been behind some of the big successes out of Denmark, Trustpilot and Vivino. You might know some of these. And we also did a few listings, actually, both in Sweden and in Denmark. So it's an interesting subject. And on a side note, it actually felt really strange driving up here. My mother-in-law lives on the right other side of the ocean, right? And so it was mixed feelings, but there's still an ocean in between us. So, and sorry if she's not watching. But no, so it's strange, but it's nice being on this side for once. But nice to be here.
Bear with me, those that know what venture capital is and how it works, bear with us for a second to kind of level the knowledge field. I would like to ask Sara, as you do earlier stage investment, just a quick overview of venture capital. How does it work? What are the rounds? What are the kind of ranges of money?
Yeah, absolutely. So first of all, I think we need to remember that there's tons and tons of companies and startups out there that are not suitable to even start to raise VC funding. I mean, if you want to run a startup with organic growth and kind of, sustainable and own 100% of your company until the day you maybe do an exit, for example, that's a wonderful way of running your business. So on a daily basis, I meet a lot of people where I even recommend that the business model or the idea they have is not suitable for VC. But if you're interested in VC, how it normally looks like is first, you kind of need to get off the ground. Either you have some own money to get off the ground, or you just not pay for any salaries at all and bootstrap. Then normally you have the FFF round, the friends and the fools and the family members that might come and support a little bit. And then after that, you might go for the angels. And some of the best business angels out there are the ones who've been through this journey before, who's been founders and know how it is to be a founder. And then they might have made some money out of that, so they invest from their own pockets. And this is a great way to get off the ground because you get a lot of support. Many times they can stay close to you, which is really important in early stages. Then, after that, you can start raising from institutional investors. So this is where it's a little bit interesting where we sit, because Preseed is actually an institutional investor, but many times you co-invest with angels because you get in so early. We can also co-invest with angels, but normally larger angels. So we are the next step, which is called the seed round. So normally, when you come to us, you raise somewhere between 500,000 to 3 million euros in one round. And then after that, the names get a little bit easier, because after that, it's called an A round or Series A, and then Series B, C, D, however long, how many times you need to raise money until you hopefully do a wonderful exit in one way or another. So as long as you are growing your business, you can keep actually taking in money from VC investors, and there will be different VC funds that would be specialized in each of these stages to be of best support for you where you are.
Thank you very much. Ulf, Crunchfish has a little bit of a different trajectory rather than venture capital. Tell us a little bit more about how that was and how that is today.
Sure. So Crunchfish started in 2010, pretty much funded by the founder himself, Mr. Paul Kronholm. Friends and families connected sort of to him. I think one of them is pretty much well known here, Mr. Joachim Samuelsson, who you probably all know, who is currently still our largest shareholder. But the company was funded for about 5 years, pretty much how you described the very, very early stages, friends and family and so forth. But then in 2016, there was actually a strategic decision taken that the company needed to raise more capital to keep developing our technology. But at the same time, we also wanted to increase our exposure, both in Sweden and internationally. And then the decision was actually taken that the IPO route was the correct one to take. So in 2016, we actually conducted an IPO, raised about, I think it was about 25 or 30 million Swedish. And the strategic reason for that, as I said, was pretty much to raise capital and to gain sort of the attraction from the market, which is one of the great strengths that an IPO offers, is actually the exposure. So that was the strategic way we took. And then we have actually made a few capital raise rounds after that as well. All of them from the public stock market, which has meant that all of our shareholders, which is probably around 3,000 or 4,000 shareholders that we have right now, all of them get an equal opportunity to defend sort of their share of the company all the time, which is also one of the strengths of the stock markets.
You mentioned twice strengths. Now I'm kind of curious, what are, in your eyes, a reason to not go the IPO route so quickly?
The reason to not go the IPO route, I think, a very good reason for doing an IPO is that if you can see that you have a very large sort of value increase in the company coming up. Let's say that you are a biotech company and that you have a drug candidate which is imminent to sort of getting phase 1 results, phase 2 results. That would be a suitable time to do an IPO because the stock market likes companies which have value increases coming up. But if you think that you have like 3, 4, 5 years of work before that phase actually comes, then VC or pre-seed funding could be a correct way. But at the same time, my experience says that an IPO for a small company is always a good route to take. So I don't actually know of that many good reasons to not do it.
And that's maybe where, Alexander, like you guys invest quite early on. What are some of the characteristics you look for in a company while investing that early on? In terms of a startup and in terms of how much do you discuss funding routes, exit strategies at such an early stage?
Yeah. So yeah, we invest all the way in the early days, right? So there's a couple of founders and maybe a couple of employees, but everything is super chaotic still. They don't really know what they're doing. They have a couple of customers, but just trying to actually find product market fit and get stuff off the ground. So we will be looking for an extraordinary team. That's kind of by far our most important factor. And then so that's number one. And then there's a lot of others, right? Big market addressing, is it defensible? Can they scale really quickly? If we put some cash in, can they actually hit the pedal and get moving really fast? And how do they defend it in the long run? Barriers to entry and all these kind of things. And what are the competition doing? And how well funded other startups in the market and the incumbents and everything. So that's what we will be looking for. Towards exit routes, and this is where the discussion gets a little interesting because as a VC, as personally, I actually think IPO is an early IPO might be a good idea for some companies. As a VC, we will always say no. It's too early an exit for us to make the money that we need to make on the companies that we invest in.
And so what is that money that you need to make? as a VC? What is that money, like a ballpark
So
range?
as a pre-seed investor, right, we need to allocate around 10% of our, we need to invest around, a couple of million euros, and that's a lot for us in our fund of, 40, 50 million euros. And we need to invest that, and we need to make it 10x what we invested, right? And if they go public too early, the value increase will never be that high. So we need to keep them private for as long as possible, and then do an IPO, like Trustpilot might be doing soon or similar, right? So the normal route where IPO is kind of like the exit in the end, right? Or a trade acquisition or something. So these early IPOs, I actually think is a good thing for a lot of companies, but as a VC, it will slow down the company and not be make the return that we need. So it'll be interesting to hear. We passed on a lot of companies that go that way, and then we won't participate going forward. And we'll also try to sell off our shares as soon as possible, because we are not trading shares. We're investing in companies. So as soon as the shares are up for normal sale, we'll exit the companies. But yeah.
So what I'm hearing is that it really goes back to the founder and the founding team, and how do they want to build their business, and what are their ultimate desires and long-term visions for the business. But Sara, you don't have any exits
So for no, because we've just been investing from this fund for the past 2 years. And back to what Alexander said, we don't want that early exit. We want to see the value of the companies grow for a longer period of time. So yeah, that's correct.
And when you say longer period of time, kind of like what time frame is that? Is that 1 year, is that 10 years, is that 20 years?
Yeah, so most VC funds have an agreement with the limited partners, which is the investors in the fund, that their return on investment would come within a 10-year frame. So meaning that from the day we invest, it would be great to see an exit within 10 years. But of course, there's flexibility to that. I mean, if a company is really on the rise, and you know that if you give it another couple of years, the IPO or other exit strategies will be looking much better, there's flexibility also in those terms. But in general, you would like to see it within a 10-year lifespan.
And Alexander, you mentioned a little bit earlier about the different kind of countries about IPOing. Tell me a little bit about your thoughts on the different countries.
Sure. So
IPOs.
Denmark sucks.
Scene.
At this, to be quite honest, it's really something that our main kind of actor in this play, Vækstfonden, is trying to build up the Danish market for this, right? Early listings. But as up to now, they tried and they failed big time, and it's due to many reasons. So we've had a couple of companies that went on that were almost dead when they went on, right? And then they raised capital, but there was nothing really to invest in, and then afterwards they die maybe, right? But we did have a couple of successful listings as well, and me and Ulf was just discussing before. We don't really have that much of a culture for owning and trading shares in very small companies, both in companies in general, but also for very young companies, right? So it's not a lot of Danes that I would actually buy, so the liquidity in the market is very low. So all the companies that we've listed, except one, Pineo, just did it on the Danish market, which went good and was a good company. But most of the ones we've did went to Sweden to do it, right? So they list in First North in Sweden. We just had Ego Health or Q-Life that did a very successful IPO half a year ago or something. Yeah.
And what do you think makes the Swedish IPO scene good?
It's just a lot more capital and a lot more trading, so it's just more happening. There's nothing in Denmark, seriously, to be honest. They're really trying to build it up, though, but it's going to take a long time.
And I also think it does something to society. Now also being Swedish and then living in Denmark, I kind of try to look at the differences and the similarities. But when you live in a country like Sweden, where you have been able to build amazing big unicorns, and not only having founders going through that journey, no matter if it's Spotify or Klarna or iZettle or King or any of the others, but also the fact that the investors have been able to invest at early stages in these companies, meaning that the money goes back into the Swedish ecosystem. So if you look at the sizes of the funds of Northzone, I know William is somewhere here, and Creandum and EQT Ventures, etc., it's huge, right? But in Denmark, we've had some really, really good unicorns coming out of Denmark, but Danish investors have not been able to invest in them early on. So when they do an exit, the money is not going back into the Danish ecosystem, and it doesn't kind of reinforce this entrepreneurial spirit within Denmark, unless the founders actually move back themselves, which we see that they're doing. And I mean, we really leverage that at byFounders, because we've built what we call a byFounders collective, where we're taking the founders of Unity and Zendesk and Tradeshift and Vivino and Kahoot and Skype, and we said, if you want to support the next generation of founders, be a part of our collective, invest in our fund, and then support the portfolio companies that we invest in. So at least the people, even though the money is not returning back to Denmark, there's some people returning back that makes a big difference.
And like you said, it's the money thing, but it's also just the sheer knowledge of scaling on a global level. Yeah. And that's actually something I see a lot of. One of Skåne's strongest points is that people kind of like they build their businesses, they go for a while, but they gravitate back to here, which I think speaks a lot for a region. I have 2 more points that I want to touch on, but I do want to give space for maybe 2 questions, if I have time, from the audience. Kind of open that up. Ulf, I'm interested in what are so you combine 2 roles, that's investor relations and marketing management. How much do they overlap, and also how much similarities do you see between internal investor relations, and then what does that project to externally?
Okay, so the first question, how much do they overlap? Just from a sort of time perspective, I pretty much put 50-50% on each role, pretty much. They do overlap quite a lot, actually, in the sort of the work I do, because it all sort of boils down to like communication and how we project our brand and how we project our company outwards. So I do think that they overlap quite a lot. Then of course there are differences, because Crunchfish is pretty much a B2B company. So a lot of the marketing that we are doing towards potential customers comes from sort of business meetings. We go out, we meet potential customers and so forth. But the sort of branding work that we do, that of course we have to do to the market as a whole, and that sort of that connects a lot to the work that I do the work that I do connected to investor relations. The second question, how much sort of the internal investor relations combined or compared to the external work, because we're such a small company. We're 25 people pretty much. So yeah, obviously, and a lot of people that work at Crunchfish are shareholders, smaller shareholders or larger ones. So of course, it's always important to have everyone on board. Yeah, I would say that no, but it's obviously it's very important. I mean, we keep all our employees informed about everything that happens pretty much all the time, which is also an important aspect of being listed generally, is the amount of information that we are sort of required to give to the market and to our employees as well. So they pretty much go hand in hand.
And you just kind of led me into my second point that I wanted to touch upon, is what are requirements in terms of IPO? How much are you required to share externally as well as internally?
So externally, it's probably the most interesting one. We are required by law to publish pretty much everything that happens in the company that could sort of affect the value of our company. So let's say that we are in negotiations to land a big deal or something. We are required actually to publish that as soon as the deal happens. So we cannot
happens as in it starts happening the sales cycle, or is it as it closes?
As the deal is signed. Okay. Pretty much.
Okay.
And we cannot actually afford the luxury of being sort of strategic in when we want to publish that information. So let's say for example, that we land a major deal on a sort of Saturday afternoon. Why we would do that, I don't know, but let's say that that would happen. Then we would be required by law to actually publish that on the Saturday afternoon, even though every one of our shareholders are home having weekends. So, so that's actually one of the. It could seem as a daunting task to be forced to do, but that's something that we have to do. So we're required to publish a lot by law, and of course, as well, we have to publish quarterly reports every quarter with our financial information, everything that has happened in the company during the quarter. And that is also something that the markets, not only are we expected to do it by law, but the market expects us to do it as well, because the market sort of values us based on what we communicate, based on the sort of material in the material in the company.
So no pressure on your role at all?
No pressure on my role.
Well, can I just ask something?
Yeah.
How big of a headache is this? Just to be honest, sorry, I've never seen it from the inside. It's just we hear all these stories all the time, and it's just how much is it holding you back, you know, from being strategic and moving in the market as a company and putting reporting pressure on the company.
I mean, it doesn't affect us in our sort of possibility to be involved in like business discussions. Of course, that would make the stock market sort of bad for companies, and it's not. It all comes down to having resources in the company that can do it and that are experienced in the field, and that's why pretty much every company that gets listed have an investor relations person doing that as for a full-time job, or at least a part-time job. So it's definitely nothing that should scare companies away, but there is a lot of work to do with it, primarily based on the sort of the framework or the laws that are connected to the stock market. But that all comes down to that. I mean, the reason for all these laws is basically based on investor protection, so that no stock listed companies can sort of rip off the market, because there have been bad examples in history. I mean, I think everyone remembers the trust store affair. I can imagine you have had similar stories in Denmark, I can imagine. So it's based on investor protection, pretty much. Yeah.
Maybe we should actually use this sometimes as a reference when we ask about those few KPIs on a quarterly basis from our startups. We're also even in a board together in one of the companies, and we're by far requesting that type of reporting when it's in VC.
So kind of to sum up what I understand, and please do correct me if I'm wrong. VC money is a lot of money, a lot of runway, at the expense of giving up control and ownership of your own business.
Not control.
But, ownership, that was my second word, yes. But it's a longer runway, which gives you time to do strategic thinking and to do more long-term plays, whereas IPO is control, like full control, more transparency in terms of what needs to be communicated to actually who owns the company, but it's a shorter runway in terms of how much you can actually do as a founding team, specifically on your own terms. That's kind of like the distinction mostly I'm making. And again, like they're both completely fine routes to go. It's just more a matter of knowing A, who you are as an individual, B, who you know that you have on your founding team, and implementing that into the DNA of the company as early on as possible. I did promise time for maybe now one question, just in case we have it in the audience. Oh, you were all fantastic, no questions. All right, yes, please.
I mean, I can start by saying that the reporting requirements that we have at a seed stage, many times it comes down to that they have like a real-time KPI dashboard that they take a print screen off, and then they spend half an hour writing kind of CEO comments to that. And then we meet on a quarterly basis for a 2-hour board meeting where we discuss more strategic topics and of course comment on eventual numbers. So I would say if you're doing it right, it shouldn't be that big of an admin hurdle. But what I do agree with you is that, and I see that as a good movement, that there are certain topics, like for example ESG, looking into sustainability, etc., where yes, these type of KPIs have not been required before, and now we're seeing a movement where we want to look into that. What is the CO2 emissions, etc. So there are some more reporting requirements, but I think some of them are also good.
And on that note, we are very kindly being reminded that we've probably gone over time. Thank you so much for being here. Thanks for sharing your thoughts.
Thank you for having
Thanks
us.
for the question. Thanks for listening. And thank you to everyone that's online and listening. I'm going to hand it back over to our lovely moderator. And we should get the hell out of here.
Thank you so much.
Thank you.